I see the economy as continuing to grow consistent with its long-term growth rate. So I see an economy this year that probably will grow between 1.5% and 2%. You know, I don't want to pin it to the 10th decimal point, but it's, I think, around there. Could be more towards 1.5%, could be more towards 2%. I don't think anybody has that kind of level of precision. I don't think there's a probability of a recession is very high right now. I see a labor market that is still strong. I see employment levels as high. I see monetary policy as restrictive, but not overly restrictive. I see financial conditions which are tight for some parts of the economy. You know, I mentioned low and middle income households, mentioned small businesses, mentioned the housing market, but I see broader financial conditions that are either neutral or maybe even accommodative for other parts of the economy, right? If you look at firms that have access to capital markets, you know, capital markets are very buoyant right now. Firms are taking advantage of a low cost of equity or debt financing to issue meaningful amounts of debt and equity at a pace higher than in the last 2 years. So I see credit as generally available for households, businesses, and municipalities. So I think you know, putting all those things together, I don't see a recession as highly likely. You know, there's a rule of thumb out there, at least when I was in the markets, there was a rule of thumb that every, just counting years, not based on anything else, just on average, every 1 in 5 years, you get a recession, right? So what we call the unconditional probability of a recession, meaning if nothing else happens, is like 1 in 5, right? 20%. I kind of believe that's an appropriate number right now. You know, 20% chance of recession, 80% chance of no recession. But you know, I don't see anything that would suggest it is higher probability than that. In terms of inflation, well, let's talk about the labor market. So labor market, I think I already mentioned it. Maybe we'll get back to it later. On inflation, yes, the data has been very encouraging. The way I like to think about inflation is I try not to focus on the last data point, because it's just one data point. I try to think of what is the overall environment and what does that tell me about what inflation is likely to be 12 months from now, you know, 18 months from now, what we call the forecast horizon. I try to be as forward-looking as I can. Now, of course, the last data point does give you a lot of information about that potential path. And the data has been encouraging, although I would say, from my perspective, I'll speak for myself, of course, I'm not sure I would call the first 4 months of the year a bump on the road or an anomaly. I think, you know, we had a good 6 months at the latter half of last year. We had a unfavorable 4 months in the beginning of this year. We had 2 months of favorable inflation data. I think when you add it all together, we have continued progress to where we want to be. But I think it would be prudent to look forward to the next 12 months and think of what that environment is going to look like and what inflation may look like going forward.